What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about a stock that has over 400% revenue growth just in Q1 2022 over the revenue of the entire year 2021. This stock has also had a decreasing float and increasing short interest throughout the last 4 or 5 settlement dates, and it is absolutely poised with no ammo for short sellers until $1.50 or $2 a share, currently trading at 80 cents per share right now, implying roughly 100% upside from the current price. We are talking about Troika Media Group, or TRKA. If y'all have been around for the live streams, or if you follow me on Twitter, you guys know that I am super bullish on this stock, and today we are finally making a video on it. So I hope you guys all enjoy. Drop a like on the video if you guys did. We ended up alerting this play on Hootmoney trade alerts at 37 cents. It's currently at 80 cents, so over 100% gain on that. If you wanted to join Hootmoney trade alerts for the next play, that link is in the description as well. However, I still think this is a good play, and that's why I'm making the video on it today. So without further ado, let's get right into the juice. All right, so there's 3 different things that I like to see in a highly shorted play that I think will potentially undergo a short squeeze. The first is obviously going to be high short interest and good short interest statistics. Right here, we have a stock that currently is 14% shorted of the free float, 200% cost to borrow, 100% utilization, and then 5 days to cover right there. So short interest statistics are good. This is usually just a check mark. Yes, are they good, or no, is it bad? Then you move on to the delusion. So here on delusion tracker, you guys can see there's overall a low risk of delusion right here. They don't really have much ability to do an offering right now because they just filed an S1, as you guys could see right there. They don't have any more delusion on their shelf, so they can't do anything with that. And they don't really even need cash. And they even stated in their quarterly report yesterday that they don't need cash for over a year. So that is very, very good. And as you guys can see, the company is cash flow positive based off of their current operating cash flow. So the company is not in a position where they really need to raise capital. And they recently did have that S1 being filed where the March 2022 warrants came in. And then they also had March 2022 convertible preferred stock. So the warrants are at an exercise price of $2 per share. The convertible preferred is at an exercise price of $1.50 per share, or conversion price, might I say. The big difference here between the warrants and the convertible preferred is that if the warrants exercise price goes in the money, for example, if the share price goes above $2 per share, then whoever owns the warrants is most likely going to exercise that warrant and pocket the difference. Meanwhile, the convertible preferred is acting as if it were an actual share of the underlying stock. But since it's a preferred share, the owner of that preferred share gets paid a dividend, unlike common stockholders such as me and you. So they have less incentive to actually convert the share if they are bullish on the company because, well, they get paid that juicy dividend for being a preferred shareholder. So my current price target is this warrant exercise price of $2 per share because, again, no real dilution can occur until $2 per share. And short sellers in general, their biggest weapon that they use, especially on these penny stocks, is the fact that they are going to be diluted. And by adding supply to the float, it brings down the price. If we're just looking at a simple supply and demand equation here. And the last thing we want to look at for a short squeeze stock is the catalyst. So you guys can see right here at 11:41 a.m. there was a very, very large volume spike, and I believe this was due to some type of algorithmic short covering because this was right after this press release right here at 11:40 was released. And obviously no one's just reading through this like super quickly and making an enormous trade based off of that. So I do believe this was an algorithmic cover of well, at least some shorted stock. Not all the short sellers covered, but I do believe that some algorithm definitely did cover after that point right there. And this filing right here states that Troika Media Group reports third quarter fiscal year 2022 results. So with that being said, they mentioned their 300% increase quarter over quarter in revenue. So we don't have to go over this whole thing for the interest of time, but obviously you can look it up yourself. The main highlight here was obviously the huge revenue increase of 307% quarter over quarter, and that's what I think likely caused this algorithmic spike up in volume and probably covering of these short positions. Now with that said, the price is definitely consolidating right now, but if we do pull off the on balance volume right here, consolidation isn't what's really going on. People are buying this stock. So on balance volume basically takes buy volume and then it subtracts sell volume. So you see very, very high buy volume right here, and then it comes down on low volume. And this is a theme of short squeeze stocks. If we take a look at the S&P 500, for example, the on balance volume more or less will match the price action of the underlying security. However, it's very different with highly shorted stocks such as TRKA right here, because as you guys can see, it peaked out right here at 85 cents. Now it's down 5 cents from its peak, although on balance volume has only been going up, essentially meaning that people are buying and holding this stock. What's even crazier is that this on balance volume right here has only been going up since IPO. So this whole time since IPO on 4/20/2021, over a little over a year ago by now, it's only been being bought. Like, this has only been an accumulation for the most part. It dumped off a little bit right here, but still, I mean, come on. You can see the clear bullish divergence looking at the on balance volume and then looking at the obvious price action. So it's pretty clear and apparent that this stock is being beaten down just because of algorithmic shorting rather than it legit being a bad company, because, well, this company is making a lot of money right now. And just looking at their operating results right here of $15.7 million in revenue, multiplying that times 4, that puts us at $63 million in revenue. That's more than the market cap of the stock currently. The market cap's at $40 million. So this is trading at literally a 0.66 price to sales ratio with all things considered, which is extremely low. And what that essentially means is that this company is going to be making more money in 2022 than the market cap by over 50%. It's pretty crazy. So the short thesis at this point obviously doesn't make sense because they're clearly not going bankrupt. They're continuing to short this thing. There's even articles mentioning that the company has found a path to profitability. And if we look down here, you guys can see the company is predicted to break even approximately a year or now or less. And on top of that, the analyst here calculated a compound annual growth rate of 114%. And to put it into perspective, a growth company having a 30% compound annual growth rate is a good compound annual growth rate. 114% is a very extremely high rate of growth. So one more time to make sure our bases are covered and short sellers don't really have any leverage here. We have very juicy short interest data with a cost to borrow of 200%, putting pressure on short sellers. There's no real dilution risk, not until $2. So shorts can't use dilution as leverage in this assets. And they also, and I haven't mentioned this yet, don't have options available for trading. And short sellers usually like to hedge by buying call options. It minimizes the risk that they take on as a short seller. They can't do that in this asset. So if you see TRKA go up 20% in a day, the short seller will be losing 20% of their short position in that day. No hedging, no nothing. The options market is also notoriously used for manipulation by market makers, shorting these call options and not properly hedging them as well. So when we do have an opportunity for a short squeeze stock that doesn't have call options, we can continue this uptrend without fraudulent selling pressure. And that's why you don't really see huge major dips on this stock. I mean, it's really only retraced a little bit before being bought right back up. So my current expectation is that there's probably not going to be much in the way until $2 per share on this stock, and I am going to be staying long on this company because, well, there's no reason to not be long. If anything, there's a reason to not be short. Looking at price targets here, we can use a Fibonacci retracement. We can go from the beginning of the rally here on May 17th, 2022 to the top of the rally here on May 19th, 2022, going between the 1 fib level and the 0.786 fib level. And if we scroll out, it'll give us multiple price targets to work with. The next price target I'm looking for is $1.01, then $1.21, then $1.41, and then $1.66. Then the ultimate price target, which I think would be a fair target for this stock, is at $2.06 per share. And that is because of the delusion with the warrants being at $2 per share. But it's also because of this fib retracement, which leads me to believe the buying climax might end up being around $2 a share based off of technicals as well. So all in all, I really do like this stock for a short squeeze, simply for the reason that short sellers don't have much leverage to really take this thing down. And I truly believe the source of disappointment in a lot of these short squeeze plays is the fact that there are these delusion walls. For example, we saw RDBX go from $2 to $11 per share simply because there was no warrants until $11.50. That ran over 400%, and there was no leverage for short sellers to actually do anything besides cover and get out of their positions. TRKA is in the exact same position right now. Short sellers have zero leverage. There's 5 days to cover this stock. There's more short interest than the actual daily volume on this stock. So all in all, there's so many reasons for shorts to cover on this stock, which is why I really like this play. Anyways, that's all I got for you guys today. Drop a like on the video if you guys enjoyed. Subscribe to the channel if y'all are new, and definitely check out Hootmoney trade alerts if you guys want the exclusive due diligence that I can provide to you guys before it can make it here on the Hootmoney channel. That is the first link down below in the description and first link in the pinned comment section. If you guys wanted up to $7,000 in free stock just for depositing $1 on their platform, you can sign up for Moomoo, also using the link below in the description or pinned comment section. And that promotion is very good as well, up to $7,000 in free stock. With all that being said, my friends, I'll be signing off for now. I'll be seeing you guys next time.